Hi everyone, welcome back to the Advanced Mortgage and Insurance Solutions podcast. As you know, this podcast covers property and helps people on their journey. Whether you're a first home buyer or a seasoned investor, we cover all topics. I'm Joel Sadler, and our insurance expert today is Travis Hamilton, who works closely with Scott Miller and the team from Advanced Mortgage Solutions. Travis is a financial advisor specialising in the health and life insurance risk space. He has been in the industry for 15 years, so you're in good hands. And he's also the country chair for a global financial advice organisation called the $1 Million Round Table. It's got a long history and it focuses on assisting the top financial advisors in each country becoming the best they can when it comes to serving their clients and delivering the best advice. So look, in today's episode, we're going to discuss life insurance. So Travis, let's start off with the first question. What is life insurance and how does it work?
Thanks, Joel. Thanks for having me. Life insurance it tends to be one of the options that people know about more commonly than some of the other scenarios that can happen in the personal insurance space. It is based to provide a lump sum payout generally if a client is to either pass away prematurely or be diagnosed with a terminal illness, to help provide financial relief for whatever needs they have, whether it be a loan or family or other commitments as well. So yeah, it's just designed to help that peace of mind and take that burden off, the people that are important to them or their families in that scenario.
Yeah, that makes a lot of sense. And I mean, it sounds pretty obvious, but I'm going to ask the question, how is it different to, say, the loss of income insurance we've spoken about before?
So the loss of income's all about if you're unable to work due to, say, sickness, illness, injury, but you're still either alive or not terminally ill. You're not at that threshold. There could be a vastly lower threshold in order of a monthly benefits claim, and that's a not monthly benefit. Whereas life insurance, I say generally speaking, because there are options for monthly payouts ongoing, but for the most part, it's generally a one-off lump sum payment to provide that relief. So so we just often work through with clients and ask them, if in the event of this scenario, what would you want to have happen? And then we help them figure out what will be the optimal or ideal level of cover required to fit within their budget and all that side of things as well.
Yeah. And obviously you're working closely with Scott, who works on the mortgage side of things. I've heard before that some banks will require life insurance to get a mortgage.
Absolutely. Yeah, we do hear that from time to time with clients quite regularly. It could be, I might get asked that question weekly, for example, do I need this in order to get the loan, or the banks, do the banks require this? I believe they do. And the answer is that they don't, right? They might. It might be ideal, and probably is, but it's not actually a requirement, a legal requirement from the banks. And then if people go, oh, okay, but then we always do say with a caveat there, but hang on, it's really about whether or not you need it. What would you want? And then to have happen, if you were to die prematurely or pass away, what would you want to have happen with the mortgage? And then that should frame your decision making about whether or not to have it, right? Not what the banks say, not what I say or a financial advisor says. It's about them, and sometimes it's not even about them as well. And they might go, it's actually, in this scenario, what would your wife or husband or spouse want, or your children need? Because at the end of the day, in that unfortunate scenario, you're not actually going to be here. It's the others. So it's thinking about what they require, and sometimes, it can be obvious. People often don't think about this, and nor would it be something that you want to think about too frequently. It's something that it can be a tough but important conversation to have, and then put a plan in place, peace of mind, and then hopefully not have to think about that scenario again. And there is a bit of tact with how to have these discussions, with different cultures, backgrounds, the tabooness of the conversation for some groups. And we've got to make sure as an advisor that we don't get desensitized to these conversations. And I think we hopefully do a good job at maintaining that. And there's ways you can talk about it, framing it, that to make it less confronting, but important that they're not dismissing it as not an important conversation to have.
Yeah. I mean, it's such a, you're right, it's such a serious topic. From personal experience, my dad passed on 2005, many years ago now. We had life insurance in place, and it was great for my mum to, you know, well, to kind of get back on her feet. And as sad that event was, we were grateful that he had had that in place.
Absolutely, and the thing is, if it was free, everyone would have it, right? And so it really comes down to an affordability piece. And interestingly, it's actually a bit of a common belief from a lot of surveys and studies that people are under the assumption that life insurance costs a lot more than what it actually does. It's actually things like health insurance or income protection, because they, increased likelihood you're going to claim on it. They're actually the covers that are actually a bit more, bit more costly and can be less affordable. Whereas something like life cover, it's one of those things that hopefully a lower risk of occurring prematurely. But if it happens, it has a more of a significant impact on an outcome. So because of that, high impact, low frequency, it's actually a lot more cost effective for some cover than people believe. So so even if it's something, sometimes it's better to have something than nothing. You don't actually have to have the ideal amount or everything you need, but to be able to have something is a place to start for some people that fits within their budget. And that's the crucial thing we always say to people: whatever you do or don't do, it's got to fit within your budget. Just help them figure that out.
Yeah, awesome. Well, that's good to know that it's not the most expensive of the insurances. So I've got life insurance, and I do have life insurance, and I've noticed that there's another owner on the policy, which in this case is my wife. So if I die, does that mean she gets paid the lump sum, right? Because she's a joint owner.
Easy from a claims transition process, because it just goes to the other policy owners, and in a common case, husband, wife. Where if you are the sole owner of your policy, then it goes through to your estate, and that can take a little bit of time to process. So there are a couple of ways you can have it: jointly owned, self-owned, or cross-owned. For the other partner, where it can become an issue with jointly owned policies is unfortunately not every couple stays together, and in order to separate ownership, you need to be able to change the ownership form, which requires everyone's signatures, and assuming everyone's on the same page, that's great, but sometimes people aren't, and that becomes a bit of a problem. So it is hard because you can't crystal ball see the future of ideal scenarios, but letting people know about those different options, and then they can actually ultimately decide what ownership structure is best out of those two.
Yeah, that's such a good point. And I've found with yourself and with Scott on the mortgage side, there's so many little nuances and pieces of information and scenario, potentials that you guys understand. And I think that's why it's so important speaking to someone like yourself, because you've got 15 years in the game, and you would have seen probably almost all scenarios play out in some shape or form.
There's some memorable ones as well, which where I've seen a cross-owned policy where the couple worked together, and one of the spouses didn't want to sign the paperwork. They said, no, I still want to be paid if something happens. And they both moved on in different relationships, new families. The person can't do anything about it. They stop paying the premiums. The other person picks up the premiums, and they've got a contract that's binding. So, and it doesn't make a lot of, sometimes it's a head scratcher, but that's how our insurance contract works. It's not something to renew each year like house cover. It's a contract for life if it's the premiums paid. But there's there's a few interesting cases out there, that's for sure, about structure.
Yeah. Hey, and look, coming back to the figure, obviously it's a sensitive topic, but talking about the lump sum amount, how do people work out how much they should insure for?
And their ideal amount. So we've got some prompts that we offer to people. We don't prompt them until they ask. The reason why we don't want to kind of lead them down a scenario of you want their authentic view. And I'll give you an example of where that can be important. But For example, I asked the question is, what would you want to have happen if something were to occur to either of you guys and you weren't around anymore? And you kind of just pause and you let them be the next person to speak, right? And you just want them to think about it. And they might say something, often a common thing as well, we wouldn't want to have to worry about a mortgage, or, I don't want to leave that financial burden, to the family. And so you can talk about that if they've got other debts. After that, they sometimes go, what else should we think about? And we might say, would there be a need for an ongoing income for surviving partner for a period of time, or to help the children until they're financially independent, or for a period of time? Is education important in terms of covering costs of that or not? Funeral costs, any other legacy income for another purpose, charitable donations. Some people, that's important to them, to leave an amount to a charity that's close to their heart. And an example that you do get there was a client a wee while ago, but quite memorable. And they said, I've always promised my children that I will take them really into ice hockey, and they're going to tour around Canada and America and go around the NHL, I believe it is, and go on the ice hockey circuit. And I've always promised them we'll do that. And if I wasn't here, I want to make sure that there is the funding to do that trip without me if I can't be here. So we priced, we had to figure out how much that would cost. And I mean, that's not something in my prompts, right? I can't promise that. But so you need to have it open enough to unearth those unique scenarios. You get people that aren't from New Zealand, right? I mean, their family and heritage are in another country. So, costs of repatriation and so on and so forth is a bit more expensive than a funeral in New Zealand. So those types of scenarios, you just kind of figure out. And then it's just adding them up, basic math at the end of it. But you go through those scenarios.
Wow, interesting. Yeah. Hey, look, tell me about the process if someone's, thinking about life insurance, and they reach out to you. How does the meeting or consultation work with you?
Yep. I think our first chats or consultations with people normally can take 30, 35 minutes, roughly, to go through and, find out that, some of those questions that I talked about, as well as other products, get a bit of a gauge for their family goals, objectives, a bit about their health. And from there, we go away and look at the different options in the market, run through those options with the client. And then if they decide they want to proceed or make amendments, we do that. And then we apply and we answer the health questions with the insurer. If it's just life cover, for example, it's a lot more simplistic than, say, something like health insurance in terms of the level of questions and disclosure. For example, if you've got a sore knee, life cover, that doesn't matter, or health insurance, that's important. So there's a different threshold of, requirements from underwriting. And then basically, it can sometimes be underwritten on the spot nowadays pretty quickly, or sometimes more complex cases, they need to check notes from the GP. And then it goes into force, and that's it. And it doesn't change until clients, want to amend it. So, it's for life, unless they stop paying their premium or want to cancel it. It will just continue on. And it's actually, a lot of people don't realize it's actually global cover, worldwide cover. So you can live or move pretty much anywhere in the world. And, it covers you. So you don't have to be, say, in New Zealand or Australia or so on and so forth. So
it's good to know. Yeah. And is that consultation, do you charge for that, or is that free? How does that work?
We don't charge a fee for advice. We in our disclosure, which we give to clients at the beginning, we talk about how we're paid or remunerated, and it's generally in a form of a commission for any completed policy. And then once we know what that is, what that will be, we disclose that to the client as well. So it's got full transparency in how we're remunerated. And because of that way in which the industry at large is remunerated, we don't charge any fee for advice, which is really important because a lot of people that need financial advice, whether it be from any form, right, insurance or mortgages or another area, sometimes the people that are need it the most are the ones least likely to afford it. So if you put in a model where, sorry, I'm getting a bit political here, but if you put in a model where you remove commission but you charge the fee for advice, which they've done in some countries, it takes some people out of getting advice, and the ones that need it the most, because they can't afford to seek advice. So that's how the model in New Zealand works. And I think it's good for people to know that they can have a conversation, make an informed decision one way or another, and know it's not going to cost them to have that.
Yeah, I agree. That makes a lot of sense. Yeah. All right, Travis, look, thanks so much for joining us today. For those listening that want to get in touch with Travis, head over to www.advancedmortgagesolutions.co.nz. There's some good blog posts, information there around the insurance side of things, also contact forms and phone numbers you can ring up or submit a form to get in touch with Travis, book a meeting. As he said, it's free. So again, thanks for joining us, Travis, and we'll see you on the next episode.
Thanks for having me.